Hi everyone, welcome to my channel. If you are new to this channel, by all means subscribe this channel because I regularly post about commercial property, and more importantly, if you want to know and this is something that you are planning to purchase, or perhaps you purchase commercial property already, then this channel is going to help you to how to manage the property better and also your purchasing process. So if you are interested, then please subscribe this channel. Okay, that being said, in this video I am going to share with you that how you get deposit, interest rate, and particularly the loan of a commercial property. So let's understand one by one. Truth about deposit. Now, when you purchase a commercial property, then you need to pay the initial deposit, like at part of the purchasing process, like you sign the contract and then you need to pay the deposit, initial deposit, right? What is the agent which says that, oh, you need to pay the 10% deposit, correct? Which is like norm. Now, if you're buying, let's say $1 million property and the 10% deposit could be $100,000, right? But remember, when you sign the contract and your property would be settled after, let's say 60 days, sometimes 90 days, 3 months, you are actually tying up that $100,000, which is not giving any kind of benefit. So here is my way of doing this. I always give roughly about 1% to 2% as a initial deposit, and I say that, look, this is the way. And if you negotiate that, almost every property you can buy like this. In some case, some people will say that no, you need to pay 10%, but then don't buy those things. So the point is that you can always negotiate this initial deposit, and a $2.5 million property, you can put a deposit of only, let's say, $25,000, so which is like literally 1%. And from a vendor point of view, it doesn't matter much because this money gets held up into this agent's trust account or in a solicitor trust account anyway, so they don't get to see or they don't get to enjoy this till the time that the property gets settled. And in the event that the property is like before being unconditional, is to be knocked off for whatever reason, and you want to cancel the contract or rescind the contract, then you will get your deposit back anyway. So I would prefer this initial deposit to be as low as possible. Sometimes, most of the cases, 1% to 2% maximum. And I have bought countless of commercial properties through this approach. I would also suggest you to go with this of 1 to 2% as that initial deposit. So if the truth is like, oh, you always have to pay 5% or 10%, that's not correct. You can always negotiate and get it under like 1 to 2%. Now let's understand the truth about loans, because a lot of people talk about that, oh, I am maxed out on my borrowing capacity and I cannot get the loan anymore. And that's how I tell people, that's how you come to us and talk to us about how you can borrow more money to buy your commercial property. Because in commercial world, there is no such thing called borrowing capacity exhausted. Let me repeat, in commercial world, there is no such thing called borrowing capacity exhausted. As long as you bring the deposit, whatever way, you can always borrow money from the bank to buy commercial property. Think about this, unlimited supply. It is possible to borrow more and more money from the bank if you have that deposit. So what is the one thing? So in terms of the loan, what does the bank look into? Bank always sees one thing: how I am going to get my money back. How I'm going to get my money back is the thing that the bank is looking for. So in other words, let's say if you want to borrow $5 million from the bank question is only one thing: how you are going to pay back. So as long as you are paying back, and if you can demonstrate your ability to pay back, they are happy to lend you $5 million. So what you can do is that always ask yourself, okay, how I can demonstrate to the bank that, hey, I'll be pay you back. I'll be able to pay you back, and this is the way I'll pay you back. Now, often we talk about the lease doc loan. So in commercial property, when you purchase a property, then the income from the property should be enough to qualify for the loan, which is called lease doc loan. So what does the lender is looking for? And if you can demonstrate, if you can tick it off, then you can borrow unlimited amount of money through commercial property investing. And that's the truth. I always tell myself that, look, I have unlimited loan borrowing capacity through the bank. So as long as I can demonstrate that, okay, look, this is the way I would pay you back, they will lend me money. The next truth about the interest rate. So let's look at the interest rate. Always when you take the loan, the bank is going to put an interest rate, and interest rate sometimes depends on your borrowing capacity. In particularly, interest rate depends on how you stacked up the loan, right? What kind of loan that you have taken. I always prefer to negotiate with the lender that, okay, what is the market rate loan? So in other words, like, what is the market rate right now? And that is, in general, is the RBI interest rate, which is whatever the RBI interest rate is, plus 2%. So in other words, let's say RBI right now repo rate is, let's say, 3.85, and plus 2%, which is like 5.85 would be the ideal. But that's not sometimes true. Sometimes you get 6%, sometimes you get like 6.1, sometimes you get 5.9. So what you need to do is that initially when you get that interest rate, you must be going for a variable interest rate, because I personally prefer to always go with variable, because fixed in commercial is something that is very, very difficult, in a way that you get a loan of fixed interest rate and you don't know what's going to happen. The interest rate can go in both ways. So while you can lock it in, but my personal preference is always go with a variable interest rate, because that way whatever market is happening, I'm willing to pay, because if the market is going up, means then I have to pay more rent, I have to pay more interest. Like, in a way, the interest rate is going up. If the interest rate is going down, then I need to pay less interest. So variable is my preference. Variable is the way I do. Now, what you also need to understand is that today's interest rate doesn't mean that you just locked in for next 5-10 years, because as your property value is going up and the risk is getting down, you can always approach to the bank and say that, look, when I purchased this property, the risk was this. Now my risk has been changed drastically. What interest rate now that you will be doing? Think about this from the bank point of view. They are getting this extra money, it's almost free, because once the loan has been written, that from there onwards till the time that you're keeping the loan, bank has nothing to do. They're just collecting the extra money. Think about it, because it's just the electronic transactions. You pay them automatically, they will deduct the money. That's it. There is no human intervention with that. Because there is no human intervention, they would prefer to get less money than no money. So let me explain what I mean. Let's say your interest rate is 6%, and if you have threatened to the lender that, hey, I'm going to refinance. Now for them, let's say their margin was 2%, 4% plus 6%, 6% minus 4% is, let's say, 2% margin. So let's say they are getting 50,000 profit from your property or from your loan every single year. Now, if you threaten them and if you move out, that 50,000 they will lose completely, right? Because that customer is gone. Why would not they go with a single stroke of pen, change it what you want? Of course, it needs to be both ways, to 30,000, and then continuously getting that same amount of money for the foreseeable future. From their point of view, it's better to not lose that whole 50,000 and at least start getting same 30,000, because there is no extra effort for it. Because remember, write a new loan, there's a lot of work that needs to be done, which is like their employee need to work, all sort of the loan needs to stack up, so many risks and everything needs to be checked. But once the loan is there, and after 3 years, perhaps the property value gone up, so bank point of view, the risk has gone down drastically. Because the risk has gone down, they would hate to lose that customer. For that, they are willing to negotiate your interest significantly low, because those money as kind of a free money. There's nothing to be done, which is why almost every time if you approach to the bank after 2 or 3 years, and they will always reduce your interest rate. And this is something, of course, the lender is not going to like me by saying like this, but you can always negotiate this and you can always get your better cash flow. So the truth about your interest rate is locked down, and this is like, although variable is going to be there for next 30-40 years, that's not correct. You can always negotiate, particularly when you see your risk has gone down. You can threaten them in a way that, hey, I'm moving out to a better interest rate, and they're almost every time they're going to match it, or in fact they will even do lower than the refinance interest rate that you can get. So I hope you got some value out of it. I hope this you can implement it, this you can use it in your commercial property journey, which will give you better cash flow, which will minimize your risk, and you will have more money in your bank account. Thank you so much for watching, and I'll see you next time. Bye bye.